Coming up on Business Incorporated. Chicago wheat futures climbed more than 1% today, rising for the first time in 4 sessions. The World Bank and International Monetary Fund spring meetings get underway with an ambitious reform and fundraising agenda, likely to be overshadowed by concerns of high inflation. Egypt's headline inflation rate increased to 32.7% in March. Hello, welcome to the program. Vladi Williams. First off, let's take a look at what's happening with the markets. Even though major markets on the African continent we track are closed for Easter holidays, but we got a negative close on Thursday. That's for the NGX there. Negative close for the week was all red for the first trading week of April and the second quarter of 2023. That's for the NGX. And South Africa's index also closed, but it closed positive, 0.60%. That was for Thursday. Move over to other parts we track there. We see Egypt, the only one trading on the African continent for the major markets we track at intraday, up 0.49%, almost 0.5% at intraday this time. We see Kenya closing positive. That's for Thursday last week. It also closed for trading today. Moving over to the Middle East, we see markets are trading right there, and it's mostly positive sentiment we're seeing in the Middle East. Abu Dhabi up 0.40%. That's for the UAE. Dubai index 3,411 points, marginally up by 0.04%. And flip over to the other side of the Middle East that we track there. We see it's negative sentiment we're seeing there. Saudi Arabia down 0.45%, while Qatari index is also down 0.22%. Moving on to Europe now. See the World Bank and the IMF are getting the spring meetings on the way. Lars Holter, right there from DW in Berlin, joining me live on the show. Great to have you, Lars. So what's on the agenda at the meeting in Washington?
Well, we've heard a few details from the IMF last week already, so we can imagine the general tone of the meeting. The International Monetary Fund says that global growth remains historically weak now and in the medium term. And that's a quote from Managing Director Kristalina Georgieva. The fund expects global growth to fall below 3% this year and to remain at that level for the next half decade. It would be the IMF's lowest medium-term prediction since the 1990s. Now, diving a bit deeper, close to 90% of the world's advanced economies will experience slowing growth this year, while Asia's emerging markets are expected to see a substantial rise in economic output, with India and China accounting for half of all growth. Low-income countries are expected to suffer a double shock from higher borrowing costs and a decline in demand for their exports. And that, says the IMF, could fuel poverty and increase hunger. Another problem for the global economy, next to an economic slowdown, higher inflation, with prices rising across the board.
All right, looking at inflation, what are the price hikes that economies are mostly struggling with?
Well, really anything. Mostly, of course, higher energy prices have been a problem for the last year. Much of it has to do with Russia's war in Ukraine, but some also has to do with the policies of OPEC. Now, to counter these price hikes, which are mostly in fossil fuels, of course, large parts of the world are actually trying much harder to switch to renewables. But that is easier said than done, and it also comes with its own inflationary pressure. Some precious metals, for example, have seen higher prices recently, as demand is up for silver used in solar panels. So there's also platinum, palladium, and iridium, all key to the energy transition that many countries, including Germany, are trying to achieve.
And how is this affecting consumers in Europe?
Well, for consumers, besides those higher energy prices, higher food prices are key, and they are also across the board. Again, looking to the war in Ukraine that had direct implications on wheat prices. But the problem is way more far-reaching. Meat prices have also gone up, or eggs. Now, this weekend having been Easter, the EU took a closer look at the prices here in the EU. Eggs are currently over 30% more expensive than a year ago, and in some Eastern European countries, prices are even G7 up almost 80%.
Thanks so much, Lars Halter, right there in Berlin, for those details from the spring meeting. Now, so let's head on to the UK. We have Juliana standing by right there. Great to have you, Juliana. So it's again broadband outages in the UK, this time from Vodafone customers reporting broadband outages. How's it looking?
Well, it's not looking great. I just had a quick look on Twitter, which is, of course, the social media platform of choice for customers to rant. And that's exactly what they're doing. They're ranting this morning, and it's gone into the afternoon because, unfortunately, Vodafone broadband is out, which is not good, because I don't know if you remember, I think it was almost this time last week that Virgin Media Group had a similar problem, and I think about 55,000 people were not able to access their broadband. It does appear to be a smaller issue now, but of course not everybody is on Twitter, so the issue may be quite larger. Now, according to Down Detector, which is an online tool which tracks outages by network providers, at about 9:25 a.m. this morning local time, which I know is exactly the same as West African time at the moment, about 3,000 people were having issues accessing their broadband, and Vodafone have of course apologized. They said that they're doing their best to work through it and make sure that people can access the internet, and of course this does appear as if it's quite a small problem, it's a hiccup and people get over it. Not really. If you think about it, Vodafone is the second largest media operator, mobile operator in the world. I believe it's the third largest operating in the UK. It has over 1.8 million users. And because of the pandemic, because of the way people have changed the way they're working, a lot of people are working from home. So it's a good thing I'm not with Vodafone, laddie, because it would have been very difficult for me to connect with you. On top of the fact that people's work habits and lifestyle has changed, of course, as well, there have been significant price increases. And I think that is where the anger comes from with customers. I think just a couple of weeks ago, mobile broadband operators in the UK, they increased their charges from about 3 to, if you're very unfortunate, 15%. Now, that's a lot of money, considering we are going through the worst cost of living crisis in this country in over 40 years. Inflation is still in double digits, despite the fact that the Chancellor promised us it was going down. So even though this does appear as if, okay, your phone's off, you can't use WhatsApp, it's fine, on top of all of the other issues that are compiled on top of that, it's not great. So hopefully, fingers crossed, if you are a Vodafone user, your internet will be back up and running imminently. Though don't quote me on that. You'll have to tweet the handle.
And I hope whatever provider you're using, stay strong, going forward.
I was going to use it as an excuse, but I didn't think you deserved that, laddie.
Oh, thank you so much, Juliana. So other matters now. We see the UK will host an investment summit for Northern Ireland. That I think it's slated for September. Tell us more about this.
Yeah, that's absolutely right. This is the second global investment summit that Britain is going to host. It will be hosting in Northern Ireland, which is a pretty interesting choice, actually. I think Rishi Sunak, the Prime Minister, has obviously done that strategically, given the Windsor framework that he managed to scrape through Parliament and the Commons wasn't exactly popular with backbenchers and the entire party. And we know that Joe Biden, the US President, will be visiting Northern Ireland tomorrow, so that's a really big boost for them. The investment summit is going to be happening in October. Now, this is a follow-up to something pretty similar that Boris Johnson did on the sidelines of COP26 in Glasgow. I don't know if you remember, but we actually had Bill Gates sitting alongside Boris Johnson. He was pretty chuffed with that. And the billionaire philanthropist, I think he provided about £200 million to invest in green jobs. And I think really that's what the long-term vision is for Britain. We are struggling. If you look at what our economic numbers are compared to the rest of the G7, in fact, including Russia, but they are still trying to make Britain the capital for clean investment, green investment, levelling up. So they will be having this summit in October. I believe over 200 global investors, financiers, the likes of Bill Gates will be there. And even though a lot of these summits, as we know, Laddie, can be just photo opportunities and a great way for people to catch up and network, the last summit that was held on the sidelines of COP26, it created 30,000 jobs and it contributed about £1.9 billion to the economy. So this is no joke. It's quite a great gathering, and I suppose as we get closer to the date we'll be hearing more about it. Hopefully there'll be some sort of delegation from Nigeria or some sort.
Yeah, hopefully. But I know it's a shortened week right now with the holidays and all, but what market moving data should we be expecting this week?
It is a short week. As I said, definitely the big story of this week is going to be Joe Biden visiting the United Kingdom, which is happening tomorrow, Tuesday evening. He'll be met by Rishi Sunak, the Prime Minister. This is because we are commemorating 25 years of the Good Friday Agreement, a huge piece of framework which was put together by the former President Bill Clinton and former Prime Minister Tony Blair, who will also be at some of the gatherings that have been going to take place over the next couple of days. Of course, you can't talk about Northern Ireland without talking about Brexit and the huge headache that Prime Minister Rishi Sunak has to get over. Brexit always moves the market, so expect any statement that Biden has against Brexit to stir investors. Then, of course, we've got all-important GDP figures for the month of February out, I believe, on Thursday. Now, of course, we know we're not in a recession. It may feel like we're living in a recession in the UK, but technically we're not there yet. I think economists have kind of priced in a 0.1% expansion, which is not great, but we had a 0.3% uplift in January, and that followed a 0.5% decline in December. I think one of the big things that's holding back the UK economy at the moment is this huge swathe of industrial action which is taking place across all sectors. We've had a couple of big ones in the month of February. Is this going to make the economy drop even further? Because, you know, just one day of teachers striking and schools closing means that many parents can't go to work, which means so many people are not buying their coffee in the morning. They're not going for a drink with colleagues once they have finished in the office, and they're not buying, you know, an outfit that they don't need for a party they're probably not going to go to on the weekend. When you are a service-based economy, you need all of these factors. So all of the striking dates are affecting the growth of the economy. But as we always say, Laddie, we shall have to wait and see. But we're expecting that data on Thursday. So, of course, as soon as we have it, I'll bring it to you.
For sure. We'll be tracking all of that. So much to look forward to this week. Thank you so much, Juliana. Thank you. All right, now let's take a look at what's happening in Asia now. We see Asia-Pacific markets mostly higher. Today, some investor return from a long Easter weekend, and we see it right there. Nikkei, that's up 0.42%. The Shanghai Composite on the flip side now down 0.37%, and we see the HSI index 0.28% up. Kospi, that's also up 0.87%, almost 1%. To then ASX 200 from Australia, that's down 0.25%. Definitely looking out for what happens in mainland China. I'm going into tomorrow, but starting the week off, even though we have holidays in other global markets, and Asia is starting right here in the green. Now let's move on to the U.S. to see U.S. equity futures holding steady also on Monday as investors look ahead to key inflation data and the start of the first quarter earnings season. We see the stock futures Dow Jones Industrial Average up 0.12%, and the S&P 500 for the futures market, that's marginally up by 0.02%, and the Nasdaq, tech-heavy Nasdaq, 13,145 points, that down 0.19%. Indications that if this stays like this into the real opening, that means we might have a big major down close for that index. But major averages rose to end the holiday shortened trading week. Only the Dow notched a weekly gain of 0.6%, while the S&P and Nasdaq Composite posted weekly losses, ending lower by 0.1% and 1.1% respectively. The market was volatile. Economic data showed signs of a weakening labor market. The March jobs report on Friday showed a resilient economy and moderate inflation, however, which pushed stock futures and treasury yields higher. And now to the global oil market. We see oil steadied today after rising for 3 straight weeks as looming supply cuts from Saudi Arabia and other OPEC plus producers balance concern about weakening global growth may dampen fuel demand. Crude last week jumped more than 6%, third weekly gain after OPEC plus, the organization of petroleum exporting countries and allies, including Russia, surprised the market with a new round of production cuts starting in May. Brent crude was flat at $85.12 a barrel, while U.S. WTI crude gained 10 cents to $80.80. I will take a break now. When we come back, more stories from the African continent. Do stay with us. Welcome back. Well, 2 out of 5 BRICS nations, talking about China and Brazil, reached a deal to trade in their currencies, dumping the U.S. dollar. The deal will reduce their dependence on the U.S. dollar, given that China is Brazil's biggest trading partner. There are reports BRICS countries are working on establishing a new reserve currency to better serve their economic interests. How can Nigeria take advantage of all of this? Joining me now is Femi Onaka, MD, News Ananke Solutions Limited. Joining me via Zoom. Great to have you. Can you hear me? I think you have to unmute. I can't make out what you say. You have to unmute. Okay.
Oh, so sorry.
Fantastic.
Can you hear me now?
Fantastic. I can hear you. I can hear you now. Thank you so much. So it looks like this BRICS group influence is growing, rapidly. Is it time for Nigeria to join BRICS?
Well, I believe that Nigeria has always had the prospect, right, very bright prospect of being a member of BRICS, even from inception. The first question we should ask is, what is BRICS? What's it about? So Jim O'Neill came up with the concept of BRICS, which is some of the faster developing economies at the time, in 2001. And then they formalized the arrangement with between all of them for global economic trade in 2009, thereby forming the group from the acronym of Brazil, Russia, India, and China. South Africa incidentally joined 2 years after, in 2011. The interesting thing about it is Nigeria has some of the fundamentals required to be a member of BRICS in terms of population, in terms of GDP as we speak now, but we are also constrained in terms of some of our limitations infrastructure-wise. Security challenges that have not been straightened out. And of course, we have policy issues that sometimes give investors a lot of concern. Remember, the BRICS belt is really about countries with progressive emerging economic prospects. And while we have the potential and we can join, it's not really so much the question of joining, which will be by unanimous decision of member states, but it's really about what we are bringing to the table, because it's about economic and social collaborations across different spheres.
We know China and Brazil are working around reducing reliance on the dollar for global trade, but what would you say are the risks here?
Regarding the dollar position, I don't think that is really so much of a critical concern for us. And the reason is this: we are not a producing economy. We are more of an importing economy. Our biggest export is really oil. That's crude oil particularly. And if you look at the profile of the BRIC nations, you will find out that even in the event of a country like Brazil that exports coffee as one of the biggest exports, there's a lot of industrialization and social infrastructure in place. As such, they have the burden of the dollar on their economy, and China on their economy becomes a lot bigger because they are producing economies. The BRIC region accounts for about 35% of global trade, global GDP, and that's a significant block for them to be dependent on, the dollar as the margin for trade reflection. It is also important to note that even recently, from 2020, I believe, the GDP of the BRIC sector, or the BRIC belt, outstripped the GDP of the G7 nations, who were traditionally the industrialized and progressive nations. And that trend is expected to grow going into the future, with the emerging economies gaining more ground, in that respect. Which means that dollarization for them becomes a very critical, factor in terms of having leverage in negotiations, and they would seek to have a more balanced position for, trade negotiations.
And if African countries and Nigeria also, looking to reduce reliance on the U.S. dollar for trade, what would that really look like?
Well, so with regards to Nigeria reducing our dependence on the USD, I think the focus for anyone right now is, like I said previously, what we are bringing to the table. Which is a fantastic idea. It's something that Nigeria should naturally be part of. They are responsible for the biggest block of, a united front of nations in terms of population in the world. And Nigeria sits right up there with one of the being the most populous black nation in the world. But like I said, it comes down to productivity. We are lacking in a number of things: good network, real network. FDI is constrained. These are some of the critical issues that we need to look at as a country, and so that we can reduce our exposure to the USD. Because America has shown in recent times that they can use economic sanctions to cripple trade relations between even people that they are against, countries that they do not align with or agree with in policy. For a country like ours that is very fragile, dependence on the USD is quite a bigger challenge, because then we have to go cap in hand all the time. For finding a synergy with BRIC nations would help us to facilitate our growth prospect by building economic trade relationships with those with similar, future trends.
What kind of policies should the incoming administration be looking at to make, either joining BRICS a reality or benefiting, from what the kind of influence that BRICS has at this time? Oh, okay. Looks like Femi's frozen there. Anyway, Femi, we'll try and get your response. I don't know if you're there now, but I couldn't. Okay, I guess you're unfrozen now, Femi. I don't know if you got my question.
Oh, what policies should the incoming administration be looking
exactly.
at?
Yeah.
If I get you correctly?
Yes.
I think that, this period is very interesting for a country like Nigeria, and we need to properly dimension the opportunity that, the size of the opportunity that we're looking at this point in time. The fact that there's a decentralization of trade, platform in terms of the currency of exchange regarding the dollar is a big opportunity for a country like Nigeria. It means that for us, we need to create policies that target a couple of important things. So one of the very first things we need to look at is how do we improve our productivity? The previous administration laid the groundwork in terms of some infrastructure, the Siemens power deal that is ongoing, but then we need to have a holistic agenda on how to improve productivity. Now, what do we focus on? Do we want to focus as a net export country in terms of agricultural produce, in terms of mineral oil, or are we going to focus on processing materials? Do we want to facilitate trade in the sub-region, which is another opportunity that BRICS presents for us as a country, as the biggest economy in West Africa? How do we facilitate trade negotiations and create the dynamics, right, for inter-country relations and representation, even with the other with BRIC nations that we seek to go in. So there's a policy direction that needs to be progressive, needs to understand where the world is going at the moment, where Nigeria is, what our deficiencies are, and how we're going to match, and cover up the gaps that are there. Policies that encourage FDI, right? Like constraints of removal of.
Okay, Femi. So, Femi, I think Femi's frozen again. Well, we'll have to anchor it there. Now, network issues, as I said. That was Femi Nakara there, MD, News and AK Solutions Limited, telling us the benefits of joining that BRICS bloc at this time. But let's look at other stories now. We see data from Egypt's Statistics Agency, that's CAPMAS, shows annual urban consumer inflation rate in March climbed to 32.7% year-on-year, just shy of an all-time record from 31.9% in February. The surging inflation rate follows a series of currency devaluations starting in March 2022, a prolonged shortage of foreign currency, and continuing delays in getting imports into the country. Egypt, which secured a $3 billion financial support package from the International Monetary Fund in December, has devalued its currency by half since March 2022 after fallout from Russia's invasion of Ukraine exposed vulnerabilities in Egypt's economy. And that's it on Business Incorporated. Thank you so much for watching. We'll see you again tomorrow. I'm Ladi Williams. Bye for now.